Hello and welcome to another Elliott with analysis. Today I want to talk about the U.S. equity indices, right? Namely the S&P 500, the Nasdaq, and also the Russell 2000. Right. So now over here you see the S&P 500, right? And you see that I have this wave count here with the red color alternate count. Right. I will go through the primary count first. Yeah, so over here you see that there is also one trend line that has just been broken, right? So we are in the Asian hour right now. This is the CFD, right? For this primary count, we have this ABC that has ended, right? That is on the 10th of April, right? And then we have a five wave down, and then ABC, and then we have another five wave down that is a leading diagonal, right? So this is the purple one, which is 1 degree lower than this green color one. Right, so then over here, this one will be wave two of C. Right, so over here, the primary count is suggesting that we are going down into a wave three, right? Wave three of C. Okay, so this is for the S&P, but take note of the alternate count, right? But no matter what, right, since we have already broken down, we can actually take a look at the lower time frame and see where is a good place to place the stop loss. So over here, if I have to put in a short position, right? So for a very active trader, what you can do is you can have the stop loss here, right? And then you monitor and see whether you will go up, look for reversal and short again. If not, actually my suggestion for stop loss is actually all the way here, right? So this is 107 points, right? And where is the take profit? You can put down this take profit all the way down here. Okay, so this is based on, we have this resistance over here, right? And yeah, of course there is also another one. If you are doing a bit of size, you can actually start to take a little profit here also. So we will see how the wave actually move, right? How it forms as it comes down, right? But important is still this stop loss over here, right? Right. So for most, this will be too big, even if you are going to the futures market, right? So let's make this a little bit more realistic for risk management purpose, right? And also, since we put down this stop loss, we also be a bit more realistic on this, right? So this will be more of a short-term trading. Now let's look at um, the Nasdaq. So the Nasdaq has yet to break the trend line over here, right? But because S&P 500 has already broken, right? So the expectation will be that Nasdaq should follow, right? Should follow a breakdown here. Okay. Now, if we use the measurement rule, this is more of a traditional measurement rule for technical analysis. We look at is actually over here, right? So this is not based on Elliott wave, but based on Elliott wave, we're looking at this number or this number, which is 16,717 using the Oanda CFD. Okay, so we can make a point over here. Let's draw a few more points, right? So one is over here, one is over here, right? And then the traditional measurement rule, right, is here. So we have a few points, right? So the idea is really to look at how the wave forms, right, after it breaks down. For the positioning wise, right? Similarly, the best case is actually to position it over here to stop. Okay, and you can have this, right, for a very conservative target. Let's look at this on the lower time frame to see whether this is actually realistic, right? So if you think that this stop loss is still too much, right, what you can do is let me see, you can use this trend line, right, and then you move this down. So it shouldn't break the trend line, but I would still suggest to use at least one horizontal support. So horizontal resistance in this case, right? So here 1, 2, 3, 4, right? So I would say this use this as a the main resistance, right? So over here you also see like 1, 2, 3, 4, and potentially 1, 2, 3, 4, 5. Okay, so based on the stop loss, then you do your position sizing, right? Next, we do the Russell 2000. Okay, the Russell 2000 has also broken down, if I'm not wrong. Yes, it has broken down, and if you take a look at closely here, right, it actually did a bit of consolidation before breaking down. So I would expect that you will still have some place to move, at least in the very short term trading. Okay. Um, so this is for Russell 2000. Is actually very very similar to S&P 500 and Nasdaq. The only difference is that is weaker than the S&P 500 and Nasdaq, because if you look at this is the 9th of April. It actually make a new low, right? But for S&P 500 and Nasdaq, actually they did not make a new low, which is why there's a slight difference in the wave count, right? So yeah, you can either change the S&P 500 Nasdaq, or you can change the Russell 2000, right? So if we don't change the Nasdaq and S&P, right, then this wave will end here, and then you'll similarly get A, B, C. All right. So a lot of times it's about how you manage whether you want to merge all these small waves and stuff like that in. Okay. So for me, I will keep two different counts, right? But since I did adjusted this, I'll just put it here. Um, yeah. So this is for the Russell 2000, and if I have to put in a positioning, right? Russell 2000 is actually much better now that we look at it, right? Because you are looking at this point. Actually, in terms of percentage, it may not be that good, right? It's just that over here you have a more of a rangy setup, right? So probably you can do it here, right? And then you have the profit over here, right? So that's it for the indices, right? Good luck in your trading, and remember to keep your risk tight. Thank you.